Hey guys, Mike here. So, but what a day in the market yesterday, and it was the same themes, right? It was crypto, Tesla, Palantir, Mr. again, I believe even Coin, if I'm not mistaken, IWM. So, of course, risk on, high beta, boom, 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 going to the moon. Okay, and so you didn't really see the max. That one's kind of like, and so tomorrow we're going to get into really detailed charts, and I'll show you some pretty cool stuff on that. But you guys had so many questions this week, which is awesome, by the way. I decided I'm going to get to every one of them. And so we'll get started right away because, I don't like to keep these videos too long for you guys, right? I'm not one of these 20, 30-minute video type of guys because your time is precious and so is mine. And so we'll get into these, and there's really some good ones. I'll show you some really cool stuff in this video right here. First one here says, could you please elaborate more on rubber band effect on stock and how to react on it? Cheers and support across the pond. Appreciate you watching. Yeah, I didn't make this up. I promise you this is actually a real thing. I didn't coin the phrase. I wish I did. But it's called the rubber band effect. And basically, this means simply when a stock gets too far above, because there's been a huge price surge, above the moving averages or below the moving averages. It works in both directions. It's like taking a rubber band and you stretch and stretch and stretch. And eventually, if one side slips, what happens? Boom, it pops and it goes back to its normal shape. And so when you look over here, it's not just that. You're going to see basically the stock's going to be, probably really overbought too. I think Mr. We've been talking about this, and it's been very popular lately, is a prime example. 251% above its 200 moving average, big pullback, overbought, all that fun stuff. I'll show you something about this. You think that's a lot? That's nothing, by the way. This is just, you gotta understand Mr. It's kind of like this hidden secret if you don't know anything about it, if you don't follow crypto. But when you look, again, that was 260%. Again, that's nothing, okay? That's nothing, because there's another question here. It says, is Mr. actually a real company or legit or whatever, and I'll talk to you about that. But you can see right here, sometimes what you'll see too, to know if it is a top for a stock like this, is bearish divergence, which you don't have yet. You don't have to have it. But again, that along with being 200, 300, 400% above your moving average, and you're like, ooh, Mike, what are you talking about? 400%. Well, I'm going to show you. Right here, look at this, February 2021. Look how far above the 200 it got, 474% above its 200 moving average. Woo, boy. Super overbought, stayed overbought, for quite a while. And so that's the rubber band effect, but that's to the upside, right? This works both ways. You've seen this in a stock like Lulu, for example, mini stocks. I'm just pulling Lulu because it's very popular. See what happened? Again, it's not going to be as far down, but it's 41% underneath, right? Oversold, boom, you get the rubber shot effect. Look where Lulu's going, right? And what you want to do with the stock is look back at its past. How far above the moving average has it got? And you can do the 52. I just like the 200 because that's the Mac Daddy, right? But or how far below? And when it happens, when it gets 34% below, does it have a snapback? Is it over when it gets oversold? When those two combined, that's when you get this rubber band effect. And so Lulu's seeing that. A lot of those stocks that got obliterated over the last 12 months are seeing that. Hope that helps. Next question here comes Steve. It says, is Mr. legit? Believe it or not, Mr. is a real company. Believe it or not, they sell a product. And believe it or not, they survived the dot-com bubble, which I'll show you. But understand, this one right here, it hooked up because Michael Saylor started buying Bitcoin a long time ago. And that's what people think this is, just a Bitcoin company. But they actually do have a product they actually sell. They don't make a ton of money, if I'm not mistaken. But he's obsessed with it. He's a multi-billionaire and stuff. But you can see these run-ups. That run-up is nothing. You see the run-ups in the past? The run-ups in the past were way bigger than that, what this is. But here's what some people do. People who don't like crypto, they don't want to get on the platform or buy it, they just buy Mr. Why do they buy Mr? Because the returns are so much greater. That's why, especially now. As the returns for Bitcoin have gotten less and less, as it's gotten higher and higher in price. But when you look, you can see usually they used to be in unison on this chart right here. And this happens. But when you look at the Mr. gains in the past versus what you could get with Bitcoin over the last probably 2 cycles, a lot of people would just buy Mr. and ride it up because there's Bitcoin and it's up, over 100% since whatever date I just pulled from it, right? But the same time frame, you're looking at Mr. here, which has just been absolutely insane, going up 341%. So 3x versus a 1x. Which one would you want to choose? Okay. And so that's kind of how it works. And, that's one thing about Mr. And yes, it is a real company and all that stuff. It's been around since the dot-com bubble. And if I pull that chart back, I'll actually show you really quickly here how much it went up. Look at the dot-com bubble. Went up 2,000% in 203 days. 2,000%. That's before crypto, right? And then dropped 900%, 99%, like literally 99%, I think it was. And so, and it survived and it kept going. And, I think it was a penny stock actually. And so it did survive that. Now, looking over here at the next one, it says, can you go over Carvana chart and how crazy it is? Would you ever short the stock? And when you look at the chart, this right here, boy, congratulations to anybody who got in this stock. By the way, I always say that. But the answer is absolutely no. I would never, ever short the stock unless something in particular is going to happen. And I'll tell you about that in just a minute. The reason I wouldn't short it is because it is a low float, highly shorted stock. It's one of these like Lemonade I showed you the other day. When you see these low float stocks, 115 million float, 50 million float, 75 million float, shorted between 10 and 30%, good luck. You can try to be the hero to do it. And if it pays off big time, right? And if you got it mastered, that's great. Now, I don't short stocks anyway, but when would I buy like some heavy puts into this thing? If I see recession indicators starting to heat up on this thing or heat up in the economy, I think, boy, and I see topping patterns starting on the indexes and all this fun stuff is coming out, then yeah, I would absolutely buy puts because Carvana is one of those ones, all the low float stocks do it, not just this one. Nobody's buying cars in a recession, right? But it really doesn't have a whole lot to do with that. It's just that all these low float stocks get absolutely decimated anytime there's a major pullback, right? It's going to drop anywhere from 60 to 90-something%. That's just the way it's going to be, and it's going to drop really fast. Not even. I mean, it's going to be. They're going to be like jumping out the door. They jump out the door quickly on these low float stocks because they go up fast and they come down even faster. Hopefully that helps. Let me know what you're doing on that. Next one says, what do you think about Uber? Is it a solid company to invest at least for 2024? Let us know. Thanks. I don't invest in Uber and Lyft, either one of these, but it is funny, right? The stock is down 21% since October 10th. Well, what happened? Oh, that was Robotaxi Day. Okay, that was Robotaxi Day. So not, I guess, a coincidence. But what's funny is, look at Lyft. Lyft actually went up after Robotaxi Day about 61%. Had really good earnings, which helped that gap right there. Has come down since Election Day, which you don't think is a very good sign. But when I looked at it, I said, well, wait a minute, why is Lyft up? And you got Uber down, and both of them are down since the election day, by the way. And what analysts say is the reason why is because Lyft is perceived to be navigating the potential disruption better through partnerships and a more focused approach on ride-hailing alone. Recent positive earnings, of course, helped them as well. And they got these partnerships they've worked out and stuff. Because remember, used to it was Uber going up and Lyft was struggling. And as far as 2024, I mean, we have, 6 weeks left in 2024. You can see it's below its 200 moving average. If it comes down more, you'll have a nice little bounce right there, probably off a trend line, ascending trend line, horizontal support. You can see the volume gap right there that's currently trying not to fall in. But again, you have to get above the 200. Until you get above that, you are proven guilty. It has came down into the discount, but it could fall farther, like my fizz. But again, it came back up, got rejected off that 200. And so if it can get above 71.65, yeah, absolutely can move up. Right now, it just doesn't seem to be one of the themes, right? It's not Tesla. It's not the high beta stuff that people just love to drive into right now. It's not crypto. And so, when you're looking at 2024, sure, probably, just look at the chart, see what you think about that. But, as far as after that, I'm a big supply and demand guy, and I just keep it simple. So here's a big pie chart, right? And they were obviously first to market doing their thing. It's super cool and all that good stuff, putting in partnerships. So now you have, Google doing it, Amazon's coming in, here comes Tesla. And it's going to take years for Tesla to actually get around these markets. People think it's super easy. It's not. It doesn't matter what the federal government's rules are or anything. It goes by state, and not only that, the cities, right, have to be able to approve this stuff and put it in place. And he wants to do it, obviously, a much different type of system, right, where it's like a driver using vision instead of mapping out an area like Waymo does and using all these little different gadgets they use. But going forward, I mean, to me, it's kind of like what happened to Airbnb when Verbo and all these other companies came online. Not very good. So we'll see how it goes for the future. I do find it interesting that Lyft is outperforming Uber right now. So definitely study both stock charts. So hope that helps. Let me know what you guys think, especially if you're really heavily invested in it. I know a lot of people are very passionate when it comes to Uber and stuff. Next one here says, why is TLT flat and IWM running up? I think it's pretty simple. One, that's BTLT right there, and that's IWM. One is very risk on, and one is very risk off. And so right now we are in risk on mode. That is what is pumping. That's what's moving, as you can see. And which one gets you more bang for your buck? And it's IWM versus the bonds right now. And with all this strong data coming in, everything else, you need the 10-year to really start to cool off to get IWM. I'm not IWM, but well, IWM as well, but TLT, an actual bid, right? And so right now, you can see what happened was, and TLT is flat to moving up. It's just obviously IWM is stocks. It's just the IWM is stocks, and of course the move is going to be much larger, right? And so you see this 10-year, I said, if it rounds off or starts to come down, IWM is definitely going to catch a bid. That's basically what has happened now. And of course, why do we think this was going to happen? And it's because of this trend line, right? And I was saying, well, I need IWM to come down in this gap, and 10-year has to bust out of this. And well, guess what? 10 years definitely did not bust out of this. It's so far holding. It's not like it dropped or anything, but it's going sideways. If it breaks out of that, I'll almost guarantee IWM starts coming back down. But if it starts to break down, then IWM continues up. And so that's really the difference. And then for TLT to get a real bid, you have to start having this economic data come down, and the 10-year has a cool off, okay? Hope that helps. Next one says, hey, Mike, thanks for the great content. Did you notice the head and shoulder patterns developing on the daily and weekly stocks since end of January 2024? And if you look over here, we'll actually use our trading view indicator and say, yes. If I look at stocks right there, there it is. Just type in head and shoulders. So it's there. But understand, for this to play out, you got to get down to that neckline, right? And to get down to that neckline, you're talking about a very nice 13% drop just to get to the neckline before we even start trying to carry out the head and shoulders, okay? And so, yes, it's there. We can see it. We're on notice. Semis still aren't performing very well. We'll see if they're going to catch a bid or not. Probably won't catch a bid until NVIDIA does, and it was red Friday, so we'll see what happens next week on that one. So, yeah, we do see it, and we will track it for sure. Next one here says, just wondering why no one on YouTube or even mainstream media ever talks about the silent, amazing, huge performers in the SPY. Stocks like VST, GEV, TRGP, and so on. I'm not blaming you, LOL, but it seems like media only talks about the sexy stocks while big money and hedge funds secretly make a killing on the quiet, unsung hero stocks that retail aren't even aware of. I feel like it's done on purpose. I think you're right. It is done on purpose. That is for sure. I can tell you why in just a second. But I will say this. I did cover one of those for sure. Actually, the whole sector, because most of those are utility stocks you just pointed out. And one, I believe, is a defense stock. But it was right here on August 20th when I said BlackRock, Vanguard, and State Street all bought this stock in Q2. And you can see there's the date I put the video out. And boom, this thing absolutely exploded up right here. And the utility stock goes up 92% in 94 days. Okay. Now, one thing that's really cool, though, I'll show you this before I start talking about why this happens, is this chart right here, which I've showed members so many times, especially when you're talking about trying to see if there's a recession or not. But this is utilities versus the SPY, right? So how is XLU, performing against the SPY? And you can see when it's going up, it's performing better against the SPY. When it's coming down, it obviously is performing, or actually the SPY is outperforming, And here's a cool chart I put together a long time ago, and I've showed this to members many times, especially if you're looking for, trying to figure out if there's going to be a recession or not. But also when utilities are outperforming SPY. And so it's XLU divided by SPY. So you got the jaws coming up right there. And so when utilities are pumping really hard, the market is struggling. And when utilities are basically not doing so great, that's when the market is doing really well. It's not that the utilities aren't going up. They just aren't outperforming the SPY itself. Okay. And so, when you look at this, you can see it all the time, especially on this big bull run we got back here. We were going from 2013 to 2014, 15, something like that. You can see on those drawdowns, it was utilities started to outperform the SPY. So if you see utilities outperforming the SPY, might be getting ready for some kind of pullback. Could be a small one, could be a big one, all that fun stuff. And when it gets in that band up there at the top, that's usually when they start to really come down. The market really just starts to rocket forward. And then when it comes down into this band, as you can see, and starts to pop, which we'll talk about what's going on currently, that's when you see the market. I mean, it does okay, but not as much as you would think it does. And when you see those utility stocks you're talking about start to do really, really well. Like right now, what's happening? XLU has been going sideways since August, and the SPY has been like, see you later. We're out of here, taking off, right? And what you got to do is you got to go over here to like XLU. And again, you can see when it gets in this band, see how it pops each and every time. It goes back to 2010, I believe that band does. So far, it's holding up. And then, of course, when you come over here, though, you got to find the stocks, the individual stocks. That's what you want to be in. You can pull up XLU. You can pull up all kinds of ETFs that cover utilities or whatever sector you're looking at against the SPY. So you pull up Nextra and Nextera Energy, that was called, NEE. and you can go chart it and say, okay, well, here's the trend line. Okay, let's see right here. That's a breakout. Boom, it explodes higher. Once it breaks that trend line, 41% for you. Just like that. And you look at, when this bottom was October with everything else, but you see that chart is February, right? When it started outperforming the SPY, which is the key. And that one actually bottomed when it starts outperforming the SPY. And when I come down, that's not February, but that is February right there. That's February when it started outperforming the SPY. And this thing really started pushing. They let you know where money's going. Basically, I just did a whole members video on that too, about using the SPY to figure this stuff out. And so the reason why you don't see YouTubers, and mainstream media will cover it really, but the truth is because you'll get nobody to view your stuff. That's the way it is. Any video I put out that's super educational never gets views. And it ain't your fault really. It's because you won't even get it put into your recommendation stuff. It's an algo that does this for everything. But it's very frustrating to put 2 or 3 hours of work into something and you think it's, oh man, this is wonderful. And then because it don't have the right names of stuff, it doesn't happen. So I try to fit mine in underneath those names. That's the secret. You got to have those names where people go, oh, I'll click on it. And then you fit those behind it. And that's how you get your educational stuff in, because that's what I like to do. And so that's just the way you got to play the game, unfortunately. I hate it, but that's just the truth. Now, next one here says, Mike, could you talk about solar stocks, SEDGE, FSLR, EDF, lots of speculation, options market of a Trump possible package information of renewables and alternative energy? Well, I hadn't looked at these in a while. Whoo, look at SEDGE. Oh, my goodness. Man, oh, man. This thing ain't got nowhere to go but up. Wow. Look at this one. But you can do with these, honestly, just go back and look and see how they, worked under his first presidency. You can go back 2016 to 2020. FSLR, was that First Solar? That one, the chart was a lot better. And you can see that trend line is falling right there. So if it breaks that trend line, no package in place, right? You see that there is actually a 200% range it was in pretty much his whole election. So, and then Biden got elected and see you later. It took off, but if it breaks that trend line, I guess we know there's no package in place. If it bounces, then you can get a big move because these stocks do move hardcore. In phase, absolute garbage mess right now. I mean, this thing right here was doing bad enough. And then you see all these have just been crushed. But then when the election happened, it dropped like another 30% since November 5th. It's trying to find a bottom. And so, yeah, these definitely will need a package of some kind by somebody. And the good thing is, I would assume the options are so cheap on these things, might be worth the flyer if that's what you want to do. But again, it's kind of like Chinese stocks. It's going to need some free money. It's going to need something to come out here. I mean, that's just the way it's going to be because these have been destroyed. Last one here, it says, Mike, can you share a couple of good, ideally free resources to follow seasonal rotations and related to how do you see what they're putting money into? The only one I know is really free, and maybe you guys can put what you use, is this one right here. It's called Equity Clock, the Seasonal Advantage Portfolio. You can subscribe to it, make a free login, I believe. I pulled this up for free. This is the Russell. You can see seasonality. November, December is supposed to be pretty good. You get these different stats kind of showing you stuff. And then I went over and I went back. And all you do is come out here and you just put in the name. Like Tesla, for example, click on the chart and it'll pull up for you. I don't know how much the subscription is of this, and I have no clue. So that's the only one I know. Please put in the bottom if you have any other different ones that that are free. We always like free resources and stuff. But anyway, I hope all that helps. It was fun putting it together. Appreciate all the questions. Feel free to put any more questions in the bottom for next Saturday's video. And please hit that like, subscribe button on your way out. Feel free to sign up for the membership where you get free videos, daily news brief, and a private Discord. And it's less than McDonald's combo. So anyway, hope you guys have a great rest of your weekend. I'll see you tomorrow.